pull up a map of the world. Just picture it in your head for a second.
Right.
Scan over to Central Asia and find Kazakhstan. If you really look at it, picture the sheer, physical scale of the place.
Oh, it's massive.
It really is. It isn't just a country. It's this sprawling landmass. We are talking about exactly 2,724,902 square kilometers of surface area.
Yeah, which is just huge.
Right. To put that in perspective for you listening, it is the 9th largest country on the entire planet. It's basically this colossal geographic bridge sitting right there between Europe and Asia.
Exactly.
But, here's the thing about maps and geography in general. Surface area is literally just the surface.
Yeah, it doesn't tell the whole story.
Not at all. It tells you where a country is, but it tells you absolutely nothing about how that country actually works, how it breathes, or, the sheer trauma and triumphs it has actually survived over the last 30 years.
Well, yeah, and that's exactly why we're looking beneath the surface today.
Exactly. Today, we're going deep.
And to do that properly, we are bringing you a deep dive into some incredibly multidimensional data.
Yeah, we've got a lot to get through.
We really do. We are looking at a comprehensive academic analysis report that tracks Kazakhstan's national development over a highly volatile timeline. We're talking from 1990 all the way up to 2023.
Right.
It utilizes World Bank indicators, extensive time series analysis, and cross-sectional comparisons to really paint a picture of a nation in transition.
And just a quick grounding note for you as we get into this deep dive. When we discuss the governance, political, and social metrics today, we are presenting the findings of this academic and World Bank data completely impartially.
Right, exactly.
We are not endorsing specific viewpoints or, taking sides on political systems or anything like that. Our mission here is strictly to help you decode what the data actually reveals about this country's trajectory.
Yeah, we are basically just the translators for the data.
Right. And to make sense of this incredibly dense data set, we're looking through 4 distinct lenses today.
Yep. First up is macroeconomic growth, so the wealth generation and the structural shifts.
Okay.
Second is social and human capital. That's the people, their demographics, their health, their minds.
Got it.
Third is ecological pressure. So the physical toll this massive economic engine has actually taken on the environment.
Right, the real world impact.
Exactly. And finally, the fourth lens is governance efficacy, like how the operating system of the state actually runs.
Okay, so when you synthesize all those 4 lenses together, a really defining overarching narrative kind of emerges.
It does, yeah.
This is essentially the story of a nation that survived a catastrophic economic collapse in the 1990s.
Which was brutal.
Brutal. And then they managed to ride a massive global resource wave to achieve rapid, almost dizzying economic growth.
Right.
But now they're standing at a really critical crossroads. They are facing this incredibly difficult pivot from what developmental economists call the scale of growth.
Right, just getting big and rich fast.
That's exactly. Moving from that to the quality of growth,
Yeah.
which is much more about, resilience, innovation, and sustainability.
Yeah, which is a much harder phase.
Totally. So let's start right at the beginning of that timeline with the first lens, the economic roller coaster.
Oh, and it really is a roller coaster.
Yeah. If you look at the GDP data, and just so you know, we're using constant 2015 US dollars here, so inflation doesn't warp the picture.
Good call.
So Kazakhstan's GDP in 1990 was roughly $95.3 billion.
Okay.
But by 1995, just 5 years later, it had plummeted to about $55 billion.
Wow.
I mean, that isn't just a recession. That is an economic freefall.
It really is. It's a staggering drop. It's a near halving of the entire national economic output in just half a decade.
Yeah, how does that even happen?
Well, to understand the data, you have to look at the mechanisms of what actually broke. You see, in 1991, the Soviet Union dissolved,
Right.
and Kazakhstan didn't just casually become independent. Its entire economic nervous system was violently severed.
Because they were so interconnected.
Exactly. The Soviet economy was this deeply integrated, centrally planned monolith. A factory in Kazakhstan didn't build a finished product to sell on an open market.
What do they do?
It built a highly specific component, say a gear for a tractor, and then that gear was shipped to a completely different republic for assembly.
Oh, wow. So when those borders went up,
There was no open market to find a new buyer. The supply chains didn't just slow down, they vanished completely.
okay, let me unpack this for a second. So a factory manager wakes up one morning, and the train that takes his gears to Russia just doesn't come.
Nope.
And the train bringing the raw steel from Ukraine doesn't arrive either.
Exactly that.
That's terrifying.
It was. And it was compounded by the collapse of the ruble zone. You had hyperinflation wiping out whatever meager cash reserves people and businesses actually had.
Jeez.
It was a systemic shock that just decimated industrial output and threw millions into poverty overnight.
Put yourself in those shoes for a second if you're listening. Imagine the household income for your entire neighborhood is just slashed in half over the course of a few years. The grocery store shelves are empty. The currency in your wallet is literally losing value by the hour. The stress must have been unimaginably visceral.
It was a collective trauma.
But then, the data shows something absolutely wild. Fast forward 5 or 10 years, and it's as if the entire country just struck oil in its collective backyard.
Well, they kinda did.
Right. After 2000, we see this aggressive V-shaped leap in the GDP chart. The economy just rockets upward, eventually hitting roughly $122 billion by 2022.
And that rebound was entirely fueled by a massive shift in global commodities.
The energy boom.
Exactly. Kazakhstan sits on vast reserves of hydrocarbons. And as global demand for oil surged in the 2000s, specifically driven by the hyper-industrialization of China right next door.
Oh, the timing was perfect.
It was. Kazakhstan totally capitalized on it. You can track this beautifully using the gross national income, or GNI.
And that's calculated via the World Bank's Atlas method, right?
Yes, exactly. If you follow the GNI decade by decade, you watch Kazakhstan literally climb the global income ladder.
Wow.
They pulled themselves out of the lower middle income bracket right up into the upper middle income tier. By 2021, their adjusted net national income hit approximately $153.9 billion.
That is quite the turnaround. But, the part of this wealth generation that really stops me in my tracks is the savings rate.
Oh, the 40% number?
Yes. The data shows the domestic savings rate peaked at 44% in the mid-2000s.
It's massive.
Saving nearly half of your entire GDP.
Yeah.
I mean, in consumer-driven economies like the US or the UK, that level of national capital accumulation is just unthinkable.
It really is.
So why were they hoarding it? I mean, why not immediately spend it to rebuild the infrastructure that decayed in the 90s?
Because spending it all at once would actually destroy their economy all over again.
Wait, really? How?
It's a macroeconomic phenomenon known as Dutch disease.
Okay, break that down for us.
So, if you flood your domestic economy with billions of US dollars from oil exports, your local currency appreciates massively. It gets too strong.
Oh, I see.
And suddenly, anything else you try to export like wheat or manufactured goods becomes way too expensive for the rest of the world to buy.
Oh, so your oil sector basically kills off every other sector in your economy.
Exactly. To prevent this, Kazakhstan established a national fund.
So it acts as a quarantine.
A fiscal quarantine, yes. You warehouse the oil wealth in foreign assets to keep it from overheating your domestic currency.
That's smart.
And you also build a buffer, because when you are a resource exporting country, your revenues are totally at the mercy of global markets.
Right, you can't control the price of oil.
Exactly. You save the windfall during the boom years to protect yourself during the bust years. And if you look closely at the data timeline, you see exactly why they needed that buffer.
Right, yeah. There are two massive bruises on this upward trend line. I'm looking at the years 2008 and 2015.
Yep. In 2008, the global financial crisis caused credit to dry up and commodity prices to just swing violently.
And then 2015.
Well, late 2014 and into 2015, global oil prices suffered a catastrophic crash.
Oh, right.
If you look at the adjusted net national income data for those specific years, you see an immediate painful dip. It exposes the core fragility of their model.
Yeah, when you rely so heavily on a single commodity, you don't really steer your own ship, do you?
No, the global commodities market steers it for you.
Which means we really need to look at how they interact with that global market. The export data here is almost hard to comprehend.
The jump is wild.
It is.
Yeah.
In 1995, exports were about $5.97 billion. By 2011, they peaked at $93.4 billion.
Yeah.
I mean, that is a completely different economic universe in just 15 years.
And the trade surplus that year is the real story. In 2011, their trade balance was 19.9% of their GDP.
I mean, 20% of their GDP was just trade surplus.
Basically, yeah. They were exporting vastly more value than they were importing, largely because global oil prices were sitting comfortably over $100 a barrel then.
Wow.
The Export Capacity Index in the multidimensional data actually tracks how Kazakhstan's purchasing power within global value chains evolved.
So they went from a struggling, isolated post-Soviet state to a major player with very deep pockets.
Precise.
But here's a paradox.
Yeah.
When we look inside the borders at the domestic structural transformation, the data tells a really confusing story.
How so?
Well, if we look at the three main economic sectors, agriculture, industry, and services, agriculture has significantly shrunk as a share of GDP.
Right, that's common in development.
Sure. And industry, which includes oil extraction and construction, remains a dominant anchor, holding steady around $23 billion in value added recently.
Correct.
But services have absolutely exploded, hitting $136.7 billion in constant prices in 2022.
Yeah.
So if agriculture shrinks and services dominate, doesn't that imply Kazakhstan is becoming a service economy? Like, are they suddenly this huge hub for global finance or tech startups?
Well, you're seeing the surface of the data, but the underlying reality is actually very different.
Okay, lay it on me.
We really have to decouple our Western understanding of the word services from how it functions in a petrostate.
Oh, interesting.
Yeah, in an innovation economy, the service sector is often globally exportable. You have software engineers in Silicon Valley selling code globally, or bankers in London managing international capital.
Right.
But in a country undergoing a massive natural resource boom, the service sector is fundamentally derivative.
Derivative. So no massive Kazakh tech firms selling software to Europe.
No, not really. The expansion of services you see in this data is almost entirely domestic.
Ah, I see.
It is a secondary economy built to support the urban centers that are just flush with resource wealth.
Right, because of all the oil money.
Exactly. When billions of oil dollars flow into the capital, the government and energy executives spend it locally. That creates a massive boom in retail, real estate, domestic transportation, hospitality, and local finance.
Oh, I get it now. So the farmer leaves the struggling agricultural sector, moves to the city, and gets a job in logistics, or working at a high-end retail mall, or, driving for a rideshare app.
Exactly.
It looks like a service economy on paper, but ultimately, that worker's paycheck is still trickling down from an oil rig in the Caspian Sea.
Precisely the mechanism. The services are absorbing the labor, but the economic anchor hasn't changed at all.
Fascinating.
And this structural shift from rural fields to urban service centers brings us right to the demographic data.
The people powering the engine.
Yeah. The very makeup of the nation is altering to fit this new derivative economy.
Okay, so let's look at the data on that. It shows a continuous, uninterrupted rise in the urban population percentage.
Urbanization is in full swing.
Right. But the most critical numbers here are about age.
Yeah.
The report focuses really heavily on this concept of the population dividend.
Oh, it's crucial.
The working age population, so people aged 15 to 64, peaked in 2010 at 68.1% of the total population.
Right.
Since then, it has been steadily declining, hitting 61.9% in 2023.
Yeah, it's shrinking.
And at the exact same time, the old age dependency ratio, which is the percentage of elderly people relying on that shrinking working base, has climbed from 9.1% in the 1990s to over 12% in 2023.
And you have to look at the child dependency ratio as well.
Which is also going up.
It is. It has seen a significant recent rebound due to a spike in birth rates over the last decade.
So if you are listening to this, I want you to imagine the sandwich generation.
Oh, that's a great way to think about it.
Yeah, it's that exhausting phase of life where you are maybe 45 years old, you have young kids at home who constantly need your financial and emotional energy, and you also have aging parents who are starting to need your care and medical support. You're sandwiched right in the middle, getting squeezed from both sides.
It's incredibly stressful.
Totally. And when I look at this multidimensional data, Kazakhstan as an entire nation is basically becoming a sandwich generation economy.
That analogy holds up perfectly at the macroeconomic level.
Right. You have a baby boom happening at the exact same time your elderly population's living longer. The working age adults in the middle are just getting squeezed.
They really are. And if you look at the population pyramids provided in the data, those charts showing age brackets stacked on top of each other.
Yeah, the ones that look like actual pyramids.
Exactly. You can see exactly why the working base is shrinking right now.
Yeah.
The demographic data actually holds echoes.
Echoes? What do you mean?
Well, remember that catastrophic economic collapse in the 1990s we discussed?
Yeah, the 50% GDP drop.
Right. Well, people do not have children during hyperinflation and societal collapse.
Oh, wow. Of course.
There was a massive drop in birth rates. Now, 30 years later, that missing generation is exactly the cohort that should be in the prime of their working lives.
So the trauma of the 90s is literally showing up in today's labor shortage.
Yes, and it creates a ticking clock for the state.
Because they have to pay for all this.
Exactly. The government's Social Security, pension, and healthcare systems are about to face a brutal fiscal stress test.
Yeah, you have fewer prime-age workers paying income taxes into the system.
And simultaneously, you have a growing pool of elderly retirees drawing pensions, plus a massive wave of children requiring state-funded education and pediatric health care.
Which forces a very uncomfortable mathematical reality.
It really does.
If you have a shrinking pool of workers supporting a massive aging and youthful population, those few workers can't just work harder. I mean, there aren't enough hours in the day.
No, they have to work smarter.
Right. They need to generate vastly more value per hour of labor, which means we need to look at what the country is doing to upgrade the cognitive power, the human hardware of this shrinking workforce.
And the education data here is fascinating.
It really is. Youth literacy is essentially 100%.
Which is great.
But the real leap is in higher education. Back in the 1990s, higher education enrollment was hovering around 25%.
Okay.
By 2022, that number skyrocketed to 62.2%.
It is a phenomenal achievement in human capital development.
Yeah, and the demographic breakdown is even more revealing, isn't it?
It is. The World Bank tracks the Gender Parity Index, or GPI, in education.
Right.
In higher education in Kazakhstan, the GPI is greater than 1.1.
Meaning?
That means women are absolutely dominating higher education. They are the driving force behind this massive human capital upgrade.
And they just bringing that education online, too. The digital infrastructure data is just wild.
So over numbers, yeah.
Secure internet servers per million people jumped from just 3.3 in 2010 to a staggering 6,914 in 2020.
It's an explosion of connectivity.
So you have a population where the majority of young people are going to college, driven largely by highly educated women, and they are hyper-connected to lightning-fast digital infrastructure.
Right.
But, and this is the biggest paradox in the entire report for me.
The R&D paradox.
Yes. The metric for research and development spending as a percentage of GDP is practically non-existent. It has remained stagnant at around 0.14% of GDP.
Yeah, it's incredibly low.
To give you some context listening to this, leading innovation economies spend 2%, 3%, even 4% of their GDP on R&D.
Exactly.
How is this possible if you have all these highly educated people online? What is stopping the innovation?
It really comes down to the deep structural difference between technological adoption and technological innovation.
Okay, what's the difference?
Well, Kazakhstan has proven masterful at adoption. The state and the private sector are highly efficient at buying servers, laying fiber optic cables, and getting citizens onto digital platforms.
Right, they can install the tech.
They can implement existing global technology incredibly well. But innovation, actually creating net new patents, designing proprietary software architectures, inventing new engineering materials, that requires an ecosystem of risk.
And a petrostate isn't built for risk.
No, not at all. A resource extraction economy actively suppresses risk capital.
How so?
Well, if you are an investor or a bank in Kazakhstan, why would you fund a highly risky software startup led by a group of new graduates where 9 out of 10 fail?
Right, startups are super risky.
Exactly. Why do that when you can invest your capital in real estate or services that are guaranteed to be propped up by the constant reliable flow of oil money?
Oh, wow. Yeah.
The talent is absolutely there, sitting in the universities. But the financial plumbing of the economy does not route capital toward experimentation.
So they are incredibly good at downloading the app, but the economic structure prevents them from writing the code.
That is the exact friction point.
Yeah.
And it is the primary hurdle identified in the academic analysis.
Because they need to transition.
Yeah, if you want to transition from an economy that pulls value out of the ground to an economy that creates value out of the mind, an innovation economy, you have to bridge that gap between 62% higher education enrollment and 0.14% R&D spending.
But the mind needs a healthy body to function.
Oh, absolutely.
I mean, you can have a master's degree and a fast internet connection, but if your health is failing in your 40s, you drop out of the workforce, and the economy loses all that human capital.
Yeah, the health data is critical here.
The public health data in this report is basically a story of bare-knuckle survival, followed by a deeply modern crisis.
It really is a tale of two eras.
Let's look at the survival first. Infant mortality plummeted from over 40 deaths per 1,000 live births in the 90s down to just 7.7 in 2022.
Which is incredible.
That is thousands of lives saved every single year. Tuberculosis incidence rates dropped dramatically, too.
And you see a massive V-shaped reversal in the overall life expectancy right around the year 2000.
Oh, right. It mirrors the economic GDP V-shape almost perfectly.
Yes. This data proves a pretty grim biological truth. Macroeconomics is literally a matter of life and death.
Yeah, the 1990s economic collapse actually killed people.
It did. Poverty skyrocketed, nutritional intake plummeted, psychological stress from widespread job loss released chronic cortisol, and the entire Soviet-era healthcare system basically crumbled.
Wow.
The plunge in life expectancy was the biological manifestation of that economic trauma.
That is so dark, but it makes perfect sense.
The recovery post-2000 was a real triumph of restoring basic, state-funded medical accessibility. Medical resources remained stable. They maintained about 3.5 to 3.8 doctors per 1,000 people.
Okay, that's good.
And they utilized those doctors to conquer acute communicable crises like TB and infant mortality.
And once you solve the acute survival issues, you run into chronic lifestyle issues.
Yeah, the modern disease burden.
And there is one statistic in this data that is just absolutely alarming to me. It's the risk of death from non-communicable diseases, or NCDs.
Right, so we are talking about cardiovascular disease, diabetes, cancer.
Exactly. The data measures the risk of a person dying from one of these between the ages of 30 and 70.
Which are the exact prime working years we just said were shrinking.
Exactly. Now, the risk for women dying from an NCD in that window is 14.5%.
Okay.
But the risk for men is 30.2%.
It's staggering.
Almost 1 in 3 men in Kazakhstan are statistically at risk of premature death from a preventable disease. That gender gap is an absolute chasm.
It is one of the most glaring vulnerabilities in the entire data set.
What causes a gap that huge?
Well, when you see a disparity that wide between male and female NCD mortality in the exact same physical environment, it points directly toward cultural and behavioral factors.
Like lifestyle choices.
Yes. It suggests significantly higher rates of smoking, heavy alcohol consumption, high sodium diets, occupational hazards in industrial sectors, and largely unmanaged psychological stress among the male population.
Which culminates in severe cardiovascular events. Think about this through the lens of that sandwich generation economy we talked about. We just established that the country desperately needs every single worker to be highly productive to support the rising number of elderly and children.
Right.
But if nearly a third of your working-age men are a coin toss away from a massive heart attack or stroke in their 50s, that is a catastrophic economic loss.
It really is a drain on the system.
Imagine running a factory where a third of your most experienced floor managers are statistically guaranteed to just vanish without warning.
It's unsustainable.
All the state money spent on their education, all their decades of accumulated skill, wiped out by preventable lifestyle diseases.
It perfectly highlights the difference between scale growth and quality growth.
How so?
Scale growth is having enough GDP to ensure infants survive childbirth.
Right.
Quality growth is having a public health infrastructure and a cultural environment that prevents chronic diseases so your workforce can live long, unbroken, productive lives.
Wow. Okay, so we've looked at the toll on the human body. Now we really have to examine the toll on the physical environment.
The ecological data.
Yeah. The economic growth we marveled at earlier has left a massive toxic footprint.
It has.
The data shows that fossil fuel dependency remains incredibly high, at over 97% of total energy consumption. Electricity generation is just overwhelmingly dominated by coal power.
The environmental metrics present a really profound structural challenge for them.
Is there any good news there?
There is a slight silver lining. Total CO2 emissions plateaued after 2013, which indicates that their heavy industry is getting at least somewhat more energy efficient per unit of GDP.
Okay.
But the absolute per capita emissions remain stubbornly high, and it isn't just CO2.
Right.
Agriculture is identified in the report as the primary source of nitrous oxide, or N2O emissions, which is a highly potent greenhouse gas.
And what about the air people are breathing right now?
Yeah, furthermore, the data tracks PM 2.5 exposure. This affects a vast majority of the population, with levels significantly exceeding World Health Organization guidelines.
For those who aren't steeped in environmental science, PM 2.5 isn't just regular smog.
No, it's much worse.
It is fine particulate matter. We're talking microscopic soot from burning coal and diesel. It is so small that it bypasses your body's natural respiratory defenses, travels deep into your lungs, and enters your bloodstream directly.
It's incredibly dangerous.
It inflames arteries, causes pediatric asthma, triggers heart disease, and has even been linked to cognitive decline.
Right.
When you have cities trapped by local geography like Almaty in the winter, the coal smoke just sits there in a bowl. It's a daily invisible tax on the exact public health we were just talking about.
Which brings us to a really crucial concept in developmental economics tracked by the World Bank. It's called adjusted net savings.
Okay, break that down for me.
Earlier, we discussed Kazakhstan's massive gross domestic savings rate, right? Hovering around 40%.
Yeah, the massive national piggy bank.
Exactly. It looks phenomenal on paper, but adjusted net savings asks a much deeper question. Are you actually generating new wealth, or are you just liquidating your natural capital and calling it income?
Oh, that is a great question.
Adjusted net savings takes that gross savings number and subtracts the depletion of natural resources, so every barrel of oil pumped out.
Okay.
And then it subtracts the social cost of pollution damage, like the millions of dollars in healthcare costs generated by that PM2.5 exposure.
Let's build an analogy for this because I want to make sure everyone listening gets this. Imagine you run a massive delivery business.
Okay.
At the end of the year, your accountant says you have record profits and a ton of cash in the bank.
Sounds great.
But the only reason you have those profits is because you drove your fleet of delivery trucks into the ground. You never changed the oil, you never replaced the tires, you just ran them hot.
Right, you deferred all the maintenance.
Exactly. Your savings look great, but you are quietly destroying your core assets. Eventually, the trucks will die, the business will stop, and the bill will come due.
That is exactly what this metric shows.
So what the adjusted net savings data tells us is that if Kazakhstan is burning its ecological assets and polluting its workforce to hit that 40% gross savings mark, their true national savings, their actual wealth generation, is substantially lower.
The depletion of ecological assets is basically a hidden accumulating debt.
Yeah.
If you extract minerals and oil without reinvesting in sustainable alternatives, you are drawing down the principle of your natural endowment.
It's just not sustainable.
No. A transition to a green economy isn't just some abstract environmental preference here. For Kazakhstan, it is a hard macroeconomic necessity to stop the bleeding on their national balance sheet.
Okay, let's pull back and look at the whole board.
There are a lot of moving pieces.
Seriously, you have to transition to green energy, you have to completely overhaul R&D to build an innovation economy, you have to manage a demographic time bomb, and you need to fix a public health crisis among working-age men.
It's a tall order.
To execute on all of that simultaneously, you need incredibly effective government institutions. You need a powerful operating system.
Which brings us to the fourth lens.
Right. What do the World Bank governance indicators, the WGI, actually tell us about the state's capacity to do all this?
Well, the WGI data reveals a fascinating, highly specific type of state structure.
Let's hear it.
Let's examine the positive momentum first. The metric for regulatory quality has significantly improved, recently crossing into the top 50th percentile globally.
What does that actually mean on the ground?
This metric tracks the ability of the government to formulate and implement sound policies that permit and promote private sector development.
Oh, and the proof of that is right in the data we have. New business registration density is way up.
Exactly.
It is tangibly easier today to digitize a permit, register an LLC, and navigate the bureaucracy to open a business than it was 20 years ago. The state is highly effective at streamlining commerce.
It is the hallmark of what we call technocratic modernization. The administrative state functions really well. However, the data reveals a really sharp duality when you look at another core WGI metric: voice and accountability.
Okay. What does that one measure?
It measures perceptions of the extent to which a country's citizens are able to participate in selecting their government, as well as freedom of expression, freedom of association, and a free media.
And how do they score there?
According to the data, Kazakhstan remains stuck in the lower percentiles for this metric, hovering tightly around the 15% to 20% mark.
That's quite a drop from the regulatory quality.
It is. It is mathematically identified in the report as the primary shortboard in their governance structure.
So you have a state that is incredibly efficient at making it easy to open a coffee shop, but maintains a very tight, controlled grip on civic participation and political expression.
That's what the data shows, yes.
Keeping strictly to the economic implications of the data, this raises the million-dollar question for you, the listener. It's really the core tension of this entire deep dive.
It really is.
Can a country successfully build a 21st century, highly educated, innovation-driven economy without a high level of voice and accountability?
It is arguably the defining debate in modern developmental economics right now.
Is it even possible?
Well, historically, transitioning from a resource extraction economy to an innovation economy where you need that 0.14% R&D spending to skyrocket and yield actual disruptive inventions, that requires a culture of intense free thinking.
Right.
It requires challenging the status quo, unrestricted information flow, and an environment where capital and talent are not afraid to voice radical disruptive ideas.
So the question the WGI data poses is whether a low score in voice and accountability acts as an invisible ceiling on economic growth.
Exactly. Can technocratic efficiency, digitizing permits and laying fiber optic cables, actually substitute for open civic participation when it comes to fostering true, unpredictable innovation?
It's like trying to engineer a high-performance sports car, but putting a strict governor on the engine that limits how fast it can rev.
That's a great analogy.
You might have the best tires, like a 62% higher education rate and the slickest aerodynamics, like a top 50th percentile regulatory quality. But if the engine isn't allowed to breathe freely, you can only go so fast before you hit the limiter.
They're going to max out.
Exactly. Which brings us to the final synthesis of this multidimensional data.
Right, tying it all together.
When you look at all these trends from 1990 to 2023, the report's conclusion basically rests on three massive pillars for the country's future.
The path forward is very clearly delineated by the data.
Walk us through them.
Pillar 1 is economic. The nation simply must pivot away from its reliance on resource extraction and force capital toward innovation and R&D.
Right.
They have the human capital. The structural plumbing just must change to unleash it.
Makes sense. Pillar 2.
Pillar 2 is social. They have to leverage that high human capital, especially women's education, to offset the severe economic drag of an aging population and rising dependency ratios.
The sandwich generation squeeze.
Exactly. And they absolutely must conquer those lifestyle non-communicable diseases, wiping out their male workforce.
That 30% risk is just too high.
Far too high. And finally, pillar 3 is environmental.
Green transition.
Yes, a green transition is absolutely necessary to stop the long-term bleeding of their ecological assets and protect the true adjusted net savings of the nation.
So we said at the very beginning that this is a country at a crossroads.
And they really are.
The era of scale growth getting big and rich fast by pulling oil out of the ground and selling it to a hungry global market is over.
It worked for what they needed at the time.
It did. It saved them from the devastating trauma of the 1990s. But that specific engine cannot get them to the next level.
No.
The era of quality growth, focusing on cognitive efficiency, disruptive technological innovation, and environmental sustainability is the only viable path forward.
It is a really profound transition captured in the data. I mean, they went from the sheer collapse of a Soviet republic to an upper-middle-income global player.
Which is an amazing feat.
It is. Navigating deep demographic echoes and accumulating hidden ecological debts along the way.
It really is an incredible arc. And, as we wrap up, I want to leave you with one final lingering thought.
Oh, let's hear it.
It's something the data implies but leaves kind of unresolved.
Yeah.
We spent this time looking at how Kazakhstan survived the 1990s and built its wealth by riding the fossil fuel wave.
Right.
But think back to that one terrifying statistic we mentioned. A 97% dependency on fossil fuels.
It's a massive vulnerability.
We are moving into a global reality that is rapidly, desperately trying to decarbonize. Global markets, global regulations, and global capital are slowly shifting away from carbon.
True.
So what happens to a nation when its greatest economic engine, the very thing that built its modern cities, funded its universities, and generated that massive 40% savings rate, slowly becomes its biggest global liability?
That is the ultimate question.
How fast can a massive, sprawling country rewire its entire economic DNA before the world stops buying what it's selling?
It's not going to be easy.
No, it won't. When you picture that map again, that colossal 2.7 million square kilometers bridging Europe and Asia, remember that the ground beneath it holds the wealth of the past. But the people walking on it, they have to invent the future.
Probo. Beautifully said.
Thank you for joining us on this deep dive into the multidimensional data. We really hope this framework helps you look at the global headlines with a much sharper perspective. Catch you next time.